I want to welcome Andy Schectman. He is the CEO of Miles Franklin, one of the best precious metal providers that I've been able to find on the internet. Welcome, Andy.
Elliot, good to be back, and thanks for having me and your kind words. I appreciate both.
No, absolutely. It's great to have you because these are really interesting times, right? The news just gets crazier and crazier. And normally in environments like these, people turn to safe haven assets like physical precious metals, which, commands a premium. Even if the spot price goes down, physical is usually a good investment. So just want to get your take on kind of the macro environment and why people should even have precious metals on their radar.
Well, your first comment of these are very interesting times, that's a Chinese curse. May you live in interesting times. I think a lot of us long for dull and complacent the way it used to be. I was on an interview yesterday talking about the way it's been for me for the last 2 years. My dad always talks about, as he's gotten older, he looks at life. This is kind of funny, but as a roll of toilet paper. When you're a younger person, you don't notice the passage of time. You're always waiting for something, waiting to get your driver's license, waiting to be able to vote, waiting to be able to drink, waiting, and waiting until you get to an age where there's really nothing left to wait for. And now you're more cognizant of the passage of time, and the roll starts to spin faster and faster. And you notice the passage of time. And here we are, it's already Thanksgiving. I mean, where the hell did the year go? It's been packed over the last 2 years with so much stimulus, so much information. And I'm not talking financial stimulus, which certainly there's been a lot of that. I'm talking mental stimulus, where we're all so overloaded with so much going on in the periphery that I think, people sometimes are not really paying attention to what's happening around them on a macro scale, as you mentioned. And there's an awful lot going on right now, Elliot, on a macro scale, and as it pertains to precious metals and economics. When I look at a macro scale of the biggest money in the world, one word comes to mind, and it's de-dollarization. As an example, we can look at Russia. They now have more gold in their reserves than they do dollars. Over 25% of their reserves are now in gold for the first time ever. Never seen that before. China's been accumulating so much gold. Their imports through Hong Kong are up 60% year over year. That's more indicative of the people accumulating gold, because the people look around them and they see their economy on knife's edge. As every other week, it seems that their developers, property developers, are defaulting on their debt obligations. This is something that Alistair McLeod, one of the brightest minds in the industry, talked about recently, where he said he believed that China actually held 38,000 tons of gold, of which 18,000 were in the hands of their people, 20,000 in the hands of the state, on top of being the largest producer of gold in the world, the largest importer of gold in the world. They are accumulating it not just through the state, but through their people. That's 5 times nearly what we supposedly hold at Fort Knox, which hasn't been held or audited rather in almost 70 years. Other countries like Serbia at all-time highs, adding another 30% this year to their gold holdings. In India, increasing over the last 12 months over 75 tons. It's 11% year over year. And as we talked about the last time I was on your show, going back to 2017, the Dutch National Bank, the Bank of Turkey, the Bank of Poland, the Bank of Austria, all these central banks not only are copiously accumulating gold. We saw a repatriation event several years back, 2017, 18, and 19, where the banks repatriated their gold from the Bank of England and the New York Federal Reserve. All of this signals to me gold's role in what's happening, in the underlying economic chaos as to what is happening, the importance of owning gold. Now we can bring it a little bit closer to home. We can look at what's happening here with the Federal Reserve and the new nominees for the comptroller of the currency. Just a couple of weeks ago, Biden was, maybe a week ago, was in Scotland for some meeting, and the way that he is these days, the questions that are asked of him are pretty much softball or maybe even put on a tee. And the question was asked of him, Mr. President, what are you going to do about the Federal Reserve? By now, you would have nominated, and most presidents would have nominated or reaffirmed, rather, their commitment to the existing Federal Reserve chairman, Mr. Powell. When he was asked that question, his answer was, well, not sure what we're going to do yet, which was kind of strange. He came back from the trip, rested for a day, as most of us would, and fly back from Europe. But the next day, both Powell and Lael Brainerd were spotted walking into the White House. Now, Lael Brainerd is a favorite of the new progressive left. She favors modern monetary theory. And the same time that this happens, the Fed, Powell announces we're going to start tapering. We're going to start tapering the amount of bonds that we buy. Now, they buy the bonds to keep interest rates low. Keeping interest rates low is what makes everyone feel wealthy in their 401k and their home prices. And where I come from, interest rates are supposed to be set by the market, Elliot, not by the central planners. But anyways, the central planners are holding down interest rates. That keeps the wealth effect in play. Well, the bond market, after hearing this and seeing Lael Brainerd come into the White House along with Fed Chairman Powell, called BS. And the bond market rallied 10% in 4 days. Now, that's a huge move in the bond market. That's the bond market's way of saying, we're not going to taper, and Powell's not going to be reaffirmed. That Lael Brainerd will be. And she's full on modern monetary theory, where we're talking more stimulus, more money, keeping interest rates low, keeping this illusion going as long as it possibly can. That, to me, is very ominous. Now, let's stop for a moment before we talk about Omarova, who is Biden's nominee for the comptroller, which is a very important position. But let's just review. So we see the banks repatriate their money or their gold. We see the banks, lots of them, go on a massive buy. When I say banks, I mean central banks, accumulating tons and tons of gold. We can look at the COMEX market. When we talked last time, I told you a narrative that I've been talking about incessantly, and that is this new group of reportables on the COMEX market, on the Commitment of Traders report. Every week, the Commitment of Traders report is a report issued by the COMEX market. And for those people out there that don't know what COMEX is, go watch the movie if you haven't seen it. My favorite movie, Trading Places, with Eddie Murphy and Dan Aykroyd, a wonderful movie, and it takes place on the COMEX. It's loosely based after the Hunt brothers, some people think, who tried the corner of the silver market in 1980. In any case, this is the exchange where all the commodities in the globe are traded and the prices are set. They publish this report every week, and it used to just be the commercial banks versus the speculators, the hedge funds. It would show the positioning of the largest traders on the commodity exchange. Well, last year, out of nowhere, a third group of reportables showed up. After all of the years I've been watching it, it's just two, commercials and speculators, or hedge funds. Now there's this group called the others. And I talk incessantly on every podcast I've done in the last 18 months how this group has been draining the COMEX of their metal. They've been standing for delivery. The COMEX was never established as a delivery mechanism, but last year Pandora's box was open, and this group, the others, which are believed to be sovereign wealth funds, Elliot, and family offices, they keep taking possession. So one of the questions people ask me all the time is, if all this stuff is happening, then why isn't the price of gold taking off? In August, price of gold got smashed by $100, and a trader in the middle of the night at 4:30 in the morning sold 2 million ounces of gold. They sold the gold when London had already closed and before New York had opened. This is called the access market. This is the dumbest time to do anything. You do something minute. No one would dump that kind of metal onto the exchange in the middle of the night when both markets, one just closed, one hasn't opened yet, as it's traveling to New York. That trader would be shot and fired, and most likely in that order. It was done specifically for effect as gold was sitting on the 200-day moving average. When you breach the 200-day moving average on either side with momentum, technically speaking, that is often the delineation between bull trend and bear trend. So when it was pushed over the 200-day with momentum in the middle of the night, by the time it hit New York, all of the hedge funds that were long gold would have triggered their algorithms that control the hedge funds. The algorithm would say, uh-oh, just breached the 200-day with momentum, sell. Boom, 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 they all sell. By the time traders got into their office in the middle or early in the morning that day, gold had fallen by $100. Now, what I'm getting at here, one trader, this is a whale, one managed money others trader, purchased 38,000 COMEX December gold contracts. He's now pumped it up to over 40. That's 4 million ounces of gold. You would need an initial margin deposit of that 38,000 contracts of somewhere north of $350 million. So you're talking someone posting a margin requirement of over 350 million, controlling almost $8 billion worth of gold. And if it's anything like they've been doing since 2020, they will stand for delivery in December. Give me my 4 million ounces of gold. You are seeing the biggest money in the world, Elliot, the biggest money front running these decisions, first repatriating, then accumulating, and now front running a decision. So we talked about my belief that Lael Brainerd will be the new Fed chief, and they will not taper. The bond market said, BS, you ain't tapering because the bond market rallied. It should have gone the other direction, right? Interest rates fell even further, should have gone the other direction. Well, I think when you add into the equation the new nominee for comptroller, her last name is Omarova. She's a University of Cornell law professor, and Biden's choice to run the office of the comptroller. She is even more modern monetary theory. In her proposal, she wants to have the central bank basically be the people's bank, the people's ledger, as she calls it. She wants to have the digital dollar. Here's your Fed token. This is what I've been talking about since March of 2020. March of 2020, Nancy Pelosi came out and said viruses can live on currency. We need a digital dollar. Well, that's a convenient way of getting to where they really want to be. Because you see, the Federal Reserve, they want inflation. They want monetary policy to be enacted directly to the people. The problem is when money is created, without getting too deep into the weeds, the Federal Reserve buys bonds from the banks. That then the banks hold that money. But the banks have two options. They can either lend it into existence or give it back to the Federal Reserve to hold for them at next to nothing, 5 basis points or so. This is why we are seeing over $1 trillion a night into the reverse repo market, which is at 5 basis points versus lending it out to you and I for a car payment or a home equity loan or what have you at 5%, 100 times the return. They'd rather give it to the Fed at nothing, losing money in essence, so that they have safety, perceived safety with the Federal Reserve, instead of risking it, lending it out into the public at a much higher rate. It's the same reason you see banks like Wells Fargo close their lines of credit. They're afraid at what they see coming, right? So you don't have the velocity. The money is blocked by the commercial banks. So Omarova wants to get rid of the commercial banks, give the power to the Federal Reserve so they can not only give money to us when they need to increase the inflationary wheels, increase the velocity, but on the other side of the equation, and she even acknowledged that this would be a controversial topic, when inflation gets too hot, she wants to actually be able to pull money out to fight inflation out of people's accounts, to debit it directly from us. She basically wants there to be one center for money, and that is the Federal Reserve and a digital currency. She also is talking about letting the oil and gas and coal industry die. In fact, one of her, I pulled this up here, one of her comments, a quote from Miss Omarova. Here, what I am thinking about is primarily the coal industry and oil and gas industry. A lot of the smaller players in that industry are probably going to go bankrupt in short order. At least we want them to go bankrupt if we want climate change. So not only that, she wants to create an authority which will determine who gets bailed out and who dies. So you're talking, this doesn't sound like free market capitalism, at least doesn't sound like it to me. So let's put it all together. You got the biggest money in the world since 2017, repatriating gold and purchasing it. Tremendous amounts. In 2019, which we talked about before, the Bank of International Settlements reclassifies gold as the world's only other tier 1 reserve asset. Interesting timing when the banks 2 years early start running that. You see massive acquisition continuing, Russia and China and Serbia and all of these other Eastern banks massively accumulating gold and their people. You see the biggest money on COMEX, the sovereign wealth funds and the family offices copiously accumulating gold and taking possession. One trader, one of the largest concentrated long positions ever seen on COMEX, buying 4 million ounces, $7 billion. And he's going to stand for delivery next month. And then you see the nominees, and I can't believe people aren't out with pitchforks, that are basically saying, the hell with capitalism. We're going to full modern monetary theory. We will just print everything directly from the central authority and you will like it. This is what the road that we are heading down. From a macro perspective, Elliot, I look at gold and silver as wealth, not as an investment. From a macro perspective, there has never been a bigger reason to own gold. And when you see, and silver, when I say gold, I mean silver too. But when you see the nominee for the comptroller and what the bond market is calling the new Fed chairman come in and talk modern monetary theory, print low interest rates, screw everything else that this country has stood for years, for hundreds of years, relating to capitalism and free market enterprise, letting the state control it all and dictate it all, that's put a floor under the price of gold. Way that I look at this playing out, more K-shaped. The people who are wealthy are not going to give a shit about high prices for gasoline, food, and housing. Oh, wait, by the way, those are the three asset classes that are most inflated, are not included in the CPI. Isn't that interesting? Food, energy, and housing going to the moon, right? But the people who have assets won't care, because their assets in this environment are going to continue to spike as more money pours in, looking for places to go. Stocks will spike, maybe even the bond market will spike. Real estate will spike. Everything will go higher in value. And if you have assets, they will feed you. The liabilities will eat you. And the people who don't have enough money to put food on the table or pay for gasoline to get to work or to pay their escalating cost of living are going to suffer. And this is a really, really dark, bad environment. Even when they talk about the wealthy paying their taxes or paying more of their taxes, the wealthy aren't going to care because their assets are going up exponentially. It's a very, very, very dark erosion of the middle class and enrichment of the wealthy, and more of the same for the people who don't have the luxury of having assets. Elliot, I think from a macro perspective, which I favor over micro, I like to see the forest, not the rustling leaves of the trees. I think owning precious metals as wealth has never, ever, ever, ever been more important and more relevant.
Very well said. And yeah, I like that you brought up the big buys that are happening behind the scenes. 100% of the time that I hear a big whale is making a move in a market, it rips higher. So,
well, it's true. Yeah. And, you got to ask yourself, who the hell's got that kind of money to control almost $8 billion worth of gold? Who's got the kind of money to put up $350 million in margin? So this is not small players.
Exactly. So there's that. There's also, like you said, the kind of inflationary environment that's happening. But it is interesting thinking about it, because I'm sure you studied the 70s in depth, right? That was when stocks crashed, which obviously we can't afford to happen. Bonds, they lost control of bonds and gold skyrocketed. I guess the reason gold has somewhat been kept down is because people think that the Fed is in control. But is there a scenario where they lose control? I've had a lot of people on that think they're not going to be able to prop the markets up anymore.
So by their nominees, you can see they're thinking, not on our watch will this happen, because we'll go modern monetary theory. We'll just monetize the debt. As it is right now, the Fed has bought 55% of all the treasuries issued since February 2020, and they've probably provided funds next to nothing to their cohorts and their buddies to buy more. That's keeping interest rates low. That's allowing more money to pile into equities and whatnot. So there are two ways that happens, in my opinion. The first way is just through the realization from the public, and I wonder, what's it going to take? When you see prices rising at the fastest pace in 30 years, what is it going to take for people to realize that inflation is not transitory, that inflation is structural, that it is here to stay? I think at some point people wake up and say, my God, holding dollars is insanity at this point when it's losing value that rapidly. We're not there yet. That's the way where I think there's a less likely chance of that happening, where there's just an awakening by the populace that holding dollars is the key to losing value. I think the way that it really happens is by some event. Now, when we talk about how poor our media talks about events, since 1944, the dollar has been the world reserve currency. And this last August marked the 50-year anniversary of Nixon severing the gold tie, closing the gold window. In 1944, after the war, the Allies met in Bretton Woods, New Hampshire, and they anointed the dollar world reserve currency, replacing the pound sterling. And they said to the world, listen, we're going to peg our dollar to gold. You peg your currencies to our currency, and those dollars that you get from us will always be redeemable in gold. Well, towards the end of the Vietnam War, De Gaulle from France realized that we were issuing more treasuries and printing more dollars to fund the war effort than we had supposedly backing it in gold at Fort Knox. So De Gaulle started sending warships to New York Harbor filled with dollars to pick up gold. Nixon said, that's it, and closed the gold window in 1971, 50 years ago, right? So the dollar at that point is fiat. So what has given the dollar its world reserve status ever since was 3 years later, Henry Kissinger flies to Saudi Arabia and he says to the Saudis, hey, listen, we'll protect you. We'll protect you with military. We'll have a cooperation. We'll sell you arms. We got your back. You value oil through OPEC globally only in dollars. This provided a massive demand for dollars because every country that needs oil, which is every country, has to first have dollars in order to buy said oil, right? So since 1974, for nearly 50 years, what has given the dollar its world reserve status is not its backing by gold, which it did since 44, severed in 71, but is relationship with the Saudi kingdom, right? So it amazes me how few people know this. It amazes me how few people have seen the story. So September 1st, we leave Afghanistan like a bunch of fools with our tail between our legs, leaving our own American citizens behind enemy lines after giving the biometrics to the Taliban. I mean, these are our people that are still there today that were part of the war effort, and the people, the Afghanis who helped us, just turned tail and left, and that's bad. And I think there's no coincidence in the announcement that Saudi Arabia made the next day. Saudi Arabia said to the world, we have just struck a joint military cooperation agreement with Russia. The next day, Russia announced the exact same thing with Nigeria. These are the two biggest OPEC producing countries in the world. It is the protection of the Saudi kingdom that has given us the petrodollar status. The day after they made the announcement with Nigeria, you can Google all this too. Just type in joint military cooperation, Russia, Saudi Arabia, and watch what you read. The day after that, on Zero Hedge, Russia announces they've outfitted their nuclear submarines with hypersonic ICBMs. These are the ICBMs that the State Department just came out and said they're very concerned about, that they're 3 or 4 years behind the technology that Russia, China, and North Korea have already fired test missiles. These are hypersonic ICBMs that circle the globe in hours and hit the ground at the speed of an asteroid. They nearly cannot be knocked down. That is their way of saying, don't even think of fucking with us the way that you did Saddam Hussein, the way that you did with Muammar Gaddafi, both of which who said, we're going to sell oil in euro. So what's that event where they lose control, where they cannot continue to suppress the price, where they cannot continue to play these games? When OPEC makes an announcement on a Monday morning, oh, by the way, we're now opening up oil, not just in dollars, but other currencies. Are we going to go to war with Russia? What about the fact that the Chinese have embarked upon the largest infrastructure project in human history in connecting Asia and Africa, the Chinese Belt Road Initiative? Are we going to go to war with China too over Nigeria and Russia? So the point of it is that whether it be by people waking up to the fact that these rising costs and these supply chain problems are here for a long time and they're not going away anytime soon, or a seminal event like OPEC saying, we're done taking just dollars. We see the way you protected your allies in Afghanistan. We're now opening this up. We're being protected by Russia, and you're not going to mess with them. And that would probably be in their best interest. And that's when it all breaks loose. So the idea is to buy it before that happens, to buy it when no one wants it. You talk to a guy like Rick Rule, who's one of the most legendary investors out there, and he'll tell you that all the money he's ever made has come by buying assets that were out of favor when nobody wanted them. That's the old adage, buy low, sell high. We forget that. We're taught that as little kids. Whoever wants to do that? It's hard to buy low and it's hard to sell high. You think things go to heaven and never come down? You think that when something is falling, that's not when you want it, but that is when you want it. That's when you find value. That's when you have to hold true to your convictions. So when does it happen? It will happen, whether it be by hook or crook, whether it be by people just realizing what's going on or some event that's beyond the Fed's control to be able to mitigate just by bond purchases to keep the ball up in the air. And that's when it all breaks apart. Because you know what, Elliot? For the first time in my career, all asset classes, stocks, bonds, and real estate are at all-time highs, inversely correlated to the one thing they don't want to happen, a rise in interest rates. And if interest rates rise, whether it be by people just dumping dollars because they don't want to hold it anymore, or an event like Saudi Arabia forcing the hand and saying, it's been a nice run, but now we're opening it up to the world, then you'll see real quick why it's important to not be fully invested in dollar and dollar-based assets.
Absolutely. And I think this year, more so than any other, we've started to see the narrative you described just like kind of start to escalate. So even with people, everyone's noticing inflation now. So the people
like
are
toilet paper spinning faster.
Yeah. People are starting to wake up. Absolutely. And they're thinking crypto's a way out potentially, but it does seem to be correlated with tech. So you have people, they are waking up. The bond market is waking up a little bit, right? Because CPI is spiking through the roof and people don't know what they're doing. And you also said how the new leadership wants to destroy the oil industry. Well, what is that going to do to the energy input to the entire economy? Isn't that going to spike it even worse?
Of course it will. The Fed is never right. The Fed is almost always wrong, and they make the wrong move. And when we talk about a CPI spiking at over 6%, which excludes energy, food, and housing, the three most inflated assets. I see the house you're sitting in behind you. Looks like a nice house. What do you think? How much has it appreciated in the last year or two? A lot. And go to the store, buy a couple steaks and a box of strawberries. How much more does it cost? A lot. And how much more is gasoline in California or natural gas this winter for half the world? A lot more. And so these things aren't even included. John Williams of Shadow Stats tells us that inflation's at 13%. Just looking at the increase month over month in CPI, it's 12%. And so when you talk about inflation at even using their BS number of 6.5% thereabouts with interest on the 10-year treasury at 1.6, you're losing 5% per year, compounding over 10 years guaranteed by buying a 10-year treasury. Who in their right mind would do that? And this is why the Fed is the only one dumb enough to continue to buy these. And this is why there will not be tapering. This is why Lael Brainerd will take over for the Trump-appointed Powell, who wants to somewhat try to normalize balance sheet. It can never be done. And so I think that inflation is here to stay. I think low interest rates and more money than we need is here to stay. I think higher prices are here to stay. I think difficulty and supply chain bottleneck problems are here to stay for a long time. I hate to be doom and gloom. I do, but I don't see any way out of it because the Fed has already used all of the tools in their tool bag. The only thing they can do is to go nominally negative. We're already real negative. When we talk about the difference between real and nominal, nominal is the actual rate. Right, the actual rate's 1.6, but inflation's at 5.6. So the real interest rates are negative 4%. Right, nominal interest rates at 1.6. If they take that negative, that's the only tool they have left. If the interest rates rise, everything busts apart. What other tools do they have? So I don't know, man. It's one of these deals where I think gold and silver need to be viewed as wealth. And they've been wealth that have lived through 2 world wars, German hyperinflation, the Great Depression, and every pandemic, and is still immutable. So you talk about cryptocurrencies. I have a real hard time believing that this government, this Fed, will allow a competition to currency. And I really do. I think that you can see they're hiring 77,000 new IRS officials, and I think a lot of them are going to be looking at people who've been in crypto for the last few years in an area that's kind of the Wild West, that really has no regulation, that has no direction, that doesn't even have a definition of what the hell it is. You look at the lawsuit going on right now between the SEC and I'll think of it in a second. Anyways, the whole argument is, what are we? Are we a currency, or are we a property? And you know, there's no definition, but you can see that they are trying to close the loopholes with KYC and with no anti-money laundering regulations. And they've come to us and said, anyone, if the new tax bill passes, anyone that places an order with cryptocurrency will need to fill out a Form 8300. They're trying to close the window. So look, whether it's cryptocurrency, whether it's precious metals, whatever it is, I think people need to, I think if all you do is save in dollars and have assets in dollars, you're destined to go broke based upon the actions of the biggest money in the world, based upon the actions of this administration who want to take us to a place that we've never been.
Exactly. And even just keep
Ripple, by the way, Ripple, that's what I'm.
Okay. No, but even keeping your money in the digital kind of world, like where it's easily controllable by anyone in power is a little bit risky. So then thinking about just what happens in the scenario we're talking about where inflation takes off and people flock to true hard safe haven assets that aren't in that kind of digital banking system. Like we saw it during the COVID crash of March 20. What happens? You're the expert on this. What happens to kind of like the supply chain behind the scenes in precious metals when like there's a rush to go buy them?
The reason I've been saying for the last 2 years that the market will be defined by an inability to source product is that I've been doing this for 31 years, and I can cite many years where everything disappeared. In 2008, I'll give you an example. This is the best one I can give you, but it's happened multiple times. In 2008, when the price of gold fell from 1,000 to 700, 30% drop, silver from 21 to 9, almost 60% in a matter of a week. You would think that people were dumping everything onto the market, that flood it, dump it, don't want it. If the price of your home fell by 60%, you would think if you went outside, every house on the street was for sale and there was so much to choose from that it's a buyer's market. But it was the opposite of that. Within a week of that happening, every single mint across the globe was out of product. The US was shut down 8 times in 08. The Rand Mint in South Africa, for the first time in 60 years, ran out of product as one wealthy Swiss businessman flew a 747 jet there and cleaned them out. The Perth Mint in Australia shut down in August that year, took no new business. And the Austrian, UK, and Canadian Mint were working 24 hours a day, 3 8-hour shifts, and were 12 to 18 weeks backordered. All the main distributors, retailers, refineries, no one had any product. It was gone. I thought we were going out of business for months on end. When they we couldn't get any product. When they finally came back online, like the Canadian Mint was the first, with $9 silver, they said, you can place orders now. You're not going to get your product for 12 weeks, and it's a 100% premium. With $9 silver, you would pay between $17 and $18 an ounce to buy silver maple leafs and wait 2 to 3 months to get it. That was the environment. I've seen this when no one was buying metal. And with the expansion in the renaissance and the awakening in value that gold and silver offer people these days, I think it's bound to happen. It's a tiny, tiny, tiny market in comparison to the massive amount of money and wealth that's been created. 50% of every dollar ever created, Elliot, in the history of this country was done in the last 20 months. There's so much money out there chasing less stuff because fewer people have been working, creating less stuff. So you got more people chasing less stuff, prices go up. I think that's exactly what will happen here. Look at the United States Mint as an example. If you would have bought silver, I'm one of 27 US Mint authorized resellers in the world. I love the US Mint products. I'm very close to the spigot there. I have great availability. I'm at $9.50 over the price of Silver Eagles right now, over silver. $9.50 over silver on Silver Eagles, and puts me probably cheaper than anyone in the country. It's stupid. In 2019, November, right before our lives changed forever, 2 months later, if you would have said to me, I want to buy Silver Eagles, I would have said, fine, $3.29. You call me back 2 weeks later, I want to sell Silver Eagles, fine, $2.65 over the price of silver. A little bit of a spread there, 50, 60 cents between buy and sell. Oh, I'll wait, you say. You call me in March, 2 months after that, I'll pay you $11 over the price of silver to buy them. Since March of 2020 till we are right now, I haven't seen premiums on Silver Eagles dip below $8.50, not once. And so you're talking an environment with the US Mint, which is a microcosm of what we can expect to see globally, where the mints are the model of inefficiency. The demand globally, look at the group Wall Street Silver and all of the demand that they have shown upon the silver market. The demand globally is off the charts. The supply is shaky at best. This market will be defined ultimately for people who understand it by the inability to get it quickly at a decent price. The US Mint is a perfect example, with the Silver Eagle anyway, of what we will see, and probably much more than that. And if you look at the kind of money that has been created, where people are becoming centimillionaires in cryptocurrencies, where you have pro athletes signing contracts making 30, 40, $50 million a year. When you see the kind of money that's out there, and there is that realization that I talked about, scenario number one, where, my God, it's losing so much purchasing power. I got to do something. You'll buy art, you'll buy cars, you'll buy homes, you'll buy gold and silver, you'll buy anything that you can. Good luck trying to get it. Rick Rule, who I mentioned before, smartest guy I've ever met in this industry, a friend. And he recently, and has been saying for a while, that if you take the amount of metal owned by the entire United States monetary system, or the economy at large, from the Harvard Endowment Fund all the way down to Joe Sixpack, it's 0.5%. What if that number goes to 5%? That's a tenfold increase in demand. In 1980, when gold was 850 and the Dow was 850, where they crossed briefly 1-to-1 the last time, it was 8% allocation. That's a 16-fold increase. If we just hit the mean over the past 40 years, that's 2.5% allocation. That's a 5-fold increase. What's going to happen? I don't know. You tell me. Will there be any product to get? I say no. And so what's going to happen? I'll tell you exactly what's going to happen. It's going to be impossible to get. And it'll happen. They talk about, I think it's Ernest Hemingway, when they asked him, how'd you go broke? He said, little by little, then all at once. Right now, I have 2 full-time employees. That used to be one to get whatever we want, whenever we want it, like that. 2 full-time employees that are buying stuff from all the mints. One works at night and deals with the UK, South Africa, Australia, Austria. One works during the day, works with the US, with Canada, and all the regional refineries. We have to buy 90 days to 120 days in advance, pay up front in full, hedge it, run logistics. If you're not a big enough company, to buy copious amounts, they don't want to deal with small people anymore. They only want to deal with big companies who are willing to send them 6 and 7 and 8 figures to buy product. 90 days, 120 days in advance, hedge it, run logistics. When you buy it, we're paying the highest premiums we've ever had to pay for coins and bars, and we can't hedge that premium. And so we're at risk. That's why there's a larger spread than normal, because I got to buy stuff 4 months out in advance, potentially 3 to 4, and hedge it. And I can't hedge the premium. Look at the Silver Eagles. If I'm going to pay someone $5-6 over the price of silver, I can't hedge that. So there's a lot of risk involved. But the bottom line is, right now, in getting product, 60 to 120 days in advance, paid in full at the highest premiums ever, which you can't hedge, running the logistics, dealing with the constant rotation. And I'm telling you, it's a full-time job for 2 people. It's something that I never would have thought would have been anything like it is now. Before, I could have called any of the sovereign mints or their U.S. importers and say, I need X. I need it in 3-4 days. Boom, it's in my warehouse in 3 or 4 days, and I'd be glad to give it to me at a discount. Ain't that way anymore, Elliot. And I think that's where we're heading, and in spades. And I think it will only get worse as more and more people wake up, like you said, this awakening, this renaissance, this awakening to the fact that all asset classes are at all-time highs. And when you look at the economy supporting it, you got to say, how the hell is this happening? And more people are getting that aha moment.
Yeah, the inflation in the precious metal premiums is probably not transitory, right?
No, it's not transitory. and you can look at the premiums. When prices go up, they never really come back down. Look at the premiums. They haven't come down in 2 years. Look at anything. When any company raises their prices and finally makes a little bit more money in this industry, you need to do hundreds of millions of dollars to make hardly anything. The premium, the total profit in this industry forever has been 1% or less. And, with all the risk we take, it's crazy. But you look at any industry, when prices rise, it's very difficult to get it to come back down. The free market gets it back down, but we are in a place where, in Austrian economics, they call it the crack up boom, where prices are and there's misallocation of capital and distortions in price discovery and in reality. And because of that, prices aren't coming back down anytime soon until we see the free market and capitalism take back over. And where the more efficient you are and the better price and product you can bring to the public, you win. In an environment like we see right now, those aren't the rules any longer. So I think high prices are here for the foreseeable future. You can throw transitory out the window. That's a bunch of crap. And it's just another example of how the Fed is always full of crap and they're never right. Oh, yeah, fine. I guess it's not transitory. It's probably structural. I mean, that's the way they flip-flop. And I think people's mistake is believing what the Fed tells us. Look at the bond market. When they tell us they're going to taper and the bond market rallies 10% in 4 days, that's the bond market's way of saying, BS, you're full of crap again, because they know they can't taper. We've crossed that Rubicon. We cannot taper, because if we do, interest rates spike and everything that the three pillars of wealth in this country, stocks, bonds, and real estate, have a religious experience.
Really, really good information. Where can we go to learn more from you, and looking forward to stay on top of all this?
Yeah, and I hope we can do this more often. We're building a new website. We're one of the only companies in America that is licensed and bonded. In fact, maybe the only major. I live in Florida. We kept our corporate office in Minnesota. We are licensed. We are bonded. We are background checked every year. We are very, very different than every other company, because Minnesota is the only state in America that mandates that. And it holds us to a much higher standard. We're building a new website, which will allow a very small modicum of online purchasing, but we're still old school. I personally believe that in the world we live in, that is surrounded with the proliferation of identity theft and fraud, that staying old school and in a digital definition, being analog, I think is beneficial. And so our website is milesfranklin.com. The store has been closed for about a year now. Our new website is under construction, which will allow that. But if someone wants to reach out to us, all they need to do is say Elliot sent us in an email from or to info@milesfranklin. We will send a price list, and we will also guarantee your listeners the best price in the United States. And I personally will. info@milesfranklin. Ask questions, we'll reply. Either myself personally or one of my handful of brokers who I have personally trained will answer your questions. We'll call you back. We'll send you a price list and give you an example of the kind of things that we're offering right now. Valcambi kilo silver bars at $2.60 over the price of silver per ounce. 2022 United Kingdom Britannia is $3.95 over the price of silver. 2021 Australian kangaroos, $3.95 over. Our prices will be as competitive as anyone in the United States. We're licensed, we're bonded. We've never had a customer complaint ever. We're A+ rated with the Better Business Bureau, and one of only 27 companies the U.S. Mint has ever appointed as an authorized reseller. I believe our reputation is the best in the industry, but the state of Minnesota accreditation is what separates us from everyone. Give us an opportunity. We'll make sure it's a good experience.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.